JLL says India's real estate sector is expected to reach an unprecedented milestone in 2025, with institutional investments soaring to more than $10 billion. That is a second consecutive year of record performance. Domestic institutional investors make up more than half of the share, while private equity players fuel the momentum with a 30% contribution. Well, let's get some more on India's property investment outlook with JLL's head of India Capital Markets, Lata Pillai. Also joining us is Shanali Rawal, International Business Head at Anand Rathi Private Wealth Management. Lata, I'd like to start with you and talking about the report you just released. A lot of records broken. Can you just run us through some of the highlights, the things that stood out for you?
Hi, Paul. Thank you for having me. I guess the fact that from the last 4 or 5 years, barring last year, I guess on an average, the investments, foreign investments or institutional investments into the country on real estate hovered around $4.5 to $5 billion. Last year broke the trend at around more than $8 billion. And this year, I think we've crossed it and reached $10.4 billion. And I think what is really interesting this year has been the emergence of the domestic institutional investment, which is more than 50% of the investment that has happened in the country. A few interesting highlights here would be the fact that bulk of the investment is in the form of equity and also in core assets. So, and office remains the dominant sector where the investment has really come in.
So office remains the most dominant sector. Can you tell us about how some of those other sectors are performing?
Always residential used to be the preferred sector that we saw investments coming into. Indian domestic residential business is built to sale business, and you had a lot of investors looking at coming in for the development piece. You also had a bunch of public market issuances made by domestic developers, which actually increased the participation on the QIP side. And last year, that's what we saw a lot of it happening. This year, interestingly, there was takers for the office REIT stock, which is basically the public market platform for office assets. And this was what was really found a lot of investment interest. The other sector which saw interest would be the retail side. Again, there was a platform on a REIT platform on retail assets, and one saw participation in that asset class as well. The other one which finds a lot of favor is the logistics piece. Traditionally, the logistics piece has seen a lot of interest from foreign investors as well as in this particular space. And interestingly, on a platform basis, the largest investment that happened this year was on a data center platform, which was put together by a couple of very large international investors and a very large player in the sector in the country.
Shanali, I want to get to you as well and just get your view on how India's real estate market as a sector has performed this year compared to the rest of the market.
So with the real estate, there's always more of a concentrated rally that we end up seeing. Essentially, it's more, as Lata was mentioning, on the commercial side. So the rental yields play a very big role on the real estate investment as an investment. And on the residential side, you don't see too much of rental yield. It's more 6 to 8% on the commercial. And that's where, there has been some amount of uptake with the GCCs coming in and the logistics and the warehousing and the institutional investors showing interest more on the commercial space. You saw India's top 8 cities having about 16.3 million square feet of net office space absorption in the Q3 of 2025. And that's a 35% year-on-year growth. So what we look at in this particular year, compared to the equity markets, the commercial real estate has definitely done a little bit better. But this is also a trend of the real estate market. There are pockets of very high returns, and then there are also pockets of very low return. So it's a lot more volatile. So if an investor really wants to unlock this return, you have to get the right instrument as to which part of the commercial. Getting that right is quite key on the real estate sector, and which is contrary to maybe when we're looking at the Indian equity markets. Indian equity markets is more broad-based and more consistent, dependent a lot more on the fundamentals. If you see 5-year cycles of the Nifty, comparing it to the realty index, you see the Nifty ending up giving double-digit returns on almost all sectors or all time frames of 5 years that we have. Whereas the realty index, there are certain time frames that it would do negative and highly negative, and there are certain time frames that you have got highly positive. So it's a lot more volatile is what I would say.
Yeah, well, as Lata was saying in the JLL report, I mean, we've had back-to-back years of consecutive records now for domestic investment. Considering how this sort of plays to the broader growth narrative in India, do you see that trend continuing? Can you tell us about your outlook for real estate?
So our outlook for real estate remains that it would be in concentrated segments of commercial and office spaces. The big cities, when we are looking at residential real estate, that would have muted growth because there is demand in the smaller ticket size projects, but you don't see a lot of them coming in the big cities. The focus is more on the bigger ticket sizes in the larger cities, and that we think that has reached its saturation point. There is a lot more supply than what is the demand, but the office spaces in tier 2 cities and commercial, that's where the opportunity lies, and it's more concentrated in those. There would be in tier 2, tier 3 cities in the residential space, but again, very, very pocket dependent. So overall outlook for real estate would be more on the commercial side and the focus on the commercial segment. So it's segment specific. You could see some growth.
Lata, I want to take it back to you because you did mention the enthusiasm from domestic investors, but how much interest is there from foreign investors in this sector, and are there barriers to entry?
No, Paul. I guess, while 52%, if you look at it as a percentage terms, it looks like domestic seems to be taking the lead. But I think there has been a substantial growth of almost 18 to 20%, even on the foreign capital that came into real estate. So, in fact, one feels particularly optimistic that, the interest that we see is, and, one thing which I would want to mention here is that couple of things. When an investor comes into the country and make investments in any sector, they are looking for reasonable exit options. And that is something which has been provided very interestingly by the REIT space, especially on the commercial real estate piece. Many investors who have been making investments here have been able to get profitable exits and been able to do substantial sizes of exits from the market because of that. And I think that is what is fueling the continued optimism of foreign investments. And last year, if you look at 2025, almost 66% of these investments of 10.5 billion has happened in the last 2 quarters. That is after we had certain political uncertainties, certain macroeconomic headwinds. I think there was a slowing down in the first 2 quarters, which really kind of, the last 2 quarters have really seen that being abated and investments coming through. Few other things which I would like to mention here is the development of the REIT platform, has really helped in building the confidence of investors, both domestic and otherwise. Recently, there was a regulatory change that was made that actually classified REIT investments as equity. What it really does is higher market participation in this particular asset class. You will see, index funds also being able to invest into this particular asset class. This is an asset class which allows investors to invest into commercial real estate, as Sonali mentioned, with the liquidity that usually an equity market provides. And that is really what has attracted the interest. And you have found a lot of takers for this. And as far as the other sectors, sorry.
I was just wanting to bring Sonali in on that point as well, because there are plenty of opportunities for foreign investors to get involved in the Indian growth story. But this is something we've been raising a lot on Bloomberg recently. We have a chart to show it as well. Just the amount of foreign capital outflows, particularly in the last quarter of 2025. But as you were saying, the longer-term narrative around India's growth is a solid one. Do you see foreign investors making a return next year, particularly as the US dollar softens?
So when it comes to the foreign institutional investors, there's a lot of factors that end up playing out, and I think one of the biggest ones remains geopolitical uncertainty, and I think the big factor of the return will be the US-India trade deal. That is the single largest risk, I think, that we have for the equity markets or the India growth story, because all of the domestic factors are there. There is domestic growth that is taking place. There are consumption measures that have been put in. There you are seeing domestic institutional investors coming in, investor behavior completely changing, looking at growth and not just fixed income assets, which used to be in the past. So if you have to look at it, all of the ingredients are there for the growth story to unfold. What lies is the external factor of coming into a conclusion. It's the uncertainty of what's going to happen and how it's going to play out is what is been spooking the investors. And of course, with growth coming in the US as well, having good yields there, that has also obviously led to some amount of capital continuing to go back. This 2025 was, as earlier was mentioned as well by Mr. Shetty, that we've seen $17 billion go out, but the domestic growth of $80 billion has really led to a lot of the equity markets staying buoyant. 2026 could be a year of reversal, but again, a full 100% or a 90% conviction isn't there until we get some amount of clarity on the US-India trade deal.
Okay. Lata, just before we let you go, I'm curious, was there anything in your report about investment in data centers in India?
Yes, of course. I guess that is something which has caught the interest across the world, and India is not to be left behind here. As I mentioned, this year as well, there were large investments made by an Asian fund. Most of the data centers are development of data centers because there aren't too many assets which are built which can be traded. So it is primarily in the development sector and the development side. And you have investments and a platform, as I mentioned earlier, of almost 11 billion that has been set up to build data centers in different geographies across the country. So data centers remain a big area of interest, both by domestic as well as foreign investors. More so foreign investors, I would like to say.
All right, Lata Pillai of JLL and Sonali Rawal of Anand Rathi Private Wealth Management. Thank you both so much for joining us. We have more ahead. This is Bloomberg. Welcome back. You're watching Insight. Here are some of the stories we're following. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying F-16 fighter jets launched Friday night bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. China has criticized the latest US weapons sale to Taiwan, saying it raises the chances of conflict between the two superpowers. The US last week approved arms sales worth up to $11 billion, including missiles, drones and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a powder keg. The US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X, saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bloomberg's been told the US is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says the Bella 1 tanker is a Panamanian-flagged vessel sanctioned by the United States. The attempted interdiction follows the boarding of the Century's supertanker earlier on Saturday and the skipper on December the 10th. All right, amid all this geopolitical tension, we are seeing tailwinds for all the commodities you see on the board there. We've got Brent above $61 a barrel, gold and silver both hitting fresh records, silver up 3 1/3%. Before we go, here's a look at tomorrow's show. We're going to get the macro and markets outlook for 2026 with BCA Research Chief EM Strategist Arthur Budagayan with a focus on trade tensions between the US and China. That's it for Insight. This is Bloomberg.